folks, CA Rachana Ranade here, and I welcome you all to a very important and amazing video. Why amazing? Because after a long time, I'm doing a video on mutual funds, so I'm also very excited about this. In today's video, we are going to talk about liquid mutual funds. So, first things first, we are going to understand what's a liquid fund. We are going to understand for what type of goals should we be investing in liquid mutual funds. Number three, we are going to talk about top 5 parameters that you should choose or you should check while choosing a right mutual fund. And very important, I'm going to give you a bonus tip towards the end of the video, so keep on watching the video till the end. Let's start with the basics as to what is a liquid mutual fund or what are their purposes. Okay, so first things first, let's understand the meaning. Liquid funds are a category of debt mutual funds that invest in very short term instruments like treasury bills, commercial papers, and certificate of deposits with maturities of up to 91 days. And I'm sure you might have understood very little things. Okay, I'll just simplify this for you. Okay, first things first. Let's take a nice example. You all are here, investors category. You have invested your money in a debt mutual fund. Which debt mutual fund? Liquid mutual fund. Okay. Now the fund manager is going to invest your money where? Not in the stock market. He's going to invest your money in different debt instruments. You'll be like, we are only able to see some papers. What are they? These debt instruments could be something like commercial papers. They could be something like certificate of deposits. They could be something like treasury bills. Okay. Now, whenever we talk about something, let's take an example of certificate of deposit. Okay. Assume that you had invested your money in some liquid mutual fund and the fund manager decided to invest the money into, let us say, a certificate of deposit or a commercial paper of HDFC Bank. Okay. Now, what is the maturity of this commercial paper? It will be maximum up to 91 days. So, let's take an example. It's a 90 days commercial paper. What happens once it is matured? Is it your responsibility to ensure that now a new commercial paper will be introduced or what? No. It's the headache of the fund manager. Fund manager will have to check whether he wants to again reinvest in the same company's commercial paper or in a different company's commercial paper. Simple till here. Okay. Now, that we have understood that okay, these are funds with short term maturities, these are funds which invest in instruments with short term maturities. Obviously, you as investors should also ensure that you are using liquid mutual funds to meet your short term goals. Short term goals like what? It could be something like liquidity, it could be something like emergency funds, it could be something like ensuring that your child's school fees for the next year are paid very well. You need not be in a tension. That can be directly funded through the liquid mutual fund. That is a next possibility. Or you would want to plan for a nice vacation, and for that you could use up this liquid fund. Okay, so in simple words, what did we say? Liquid funds can be used for short term goals. Okay, and very important point, the main intent here is your fund should be safe. Ideally, slightly better returns as compared to saving bank account is what we can target, but please don't expect returns like 12% or 15%. Now let's come to an important point as to how will you choose a right liquid mutual fund. And for that, I'm going to tell you different parameters, but how to screen them. For that, I'm going to take you to the website tickertape.in, right? Here, I'm going to click on screener. Once I click there, I'm going to choose mutual funds and then I click on start screening. Okay. Where will I find liquid funds? Of course, under the debt category. So that's where I click and that's where I get liquid funds. Okay. Now, I'm going to use multiple parameters to choose the right mutual fund. Okay, right? Liquid mutual fund, basically. Very important. Before I start, this is nowhere close to a stock recommendation or a mutual fund recommendation. Okay, you have to understand that I'm going to teach you the process on how to filter out mutual funds for you. If you feel I want to use a different mutual fund, I want to use a different filter, it's your choice. Okay, I'm just telling you how to screen a mutual fund with few parameters. Okay, let's get started. For analyzing any mutual fund, first things first, I always check the AUM. Okay, always remember AUM, higher the better. Okay, so what am I going to do? I'm just going to drop down and here I'm going to say 3 crores वगैरह इतना चिल्लर mutual fund I don't want. Let's say I want a mutual fund with an AUM of at least 20,000 crore rupees. Here I'm getting 9 liquid funds in the filter. Now if you say, Rachana, why 20,000? I want 25,000. Okay, no problem. Take 25,000. You get 7 now. You say, no, I want 30,000. Okay, you get again 7. So it's up to you whether you want to use 20,000 as a minimum AUM, 20,000 crores as a minimum AUM or 25,000, 30,000, whatever is your choice. Okay, let us take 25,000 crores for the time being. I'm just rounding, roughly I'm doing that. Okay. Now let's understand. I would be interested in a liquid mutual fund only if it is fetching me better returns than saving account. If I'm fetching same returns, I would might as well put that money in a saving account. Okay. So here you can check 3-year CAGR. Now, if I just click here, it will be sorted in a highest to lowest category in a descending fashion. I'm just going to call out top three, okay, based on 3-year CAGR. Aditya Birla Sun Life Liquid Fund, Axis Liquid Fund, and Nippon India Liquid Fund. Okay, but you're saying, now why 3-year CAGR? I also want to check 1-year absolute returns. How do you do that? I'm just going to click on add filter. Then I'll go on returns, and here you can see absolute returns. Okay, so I'm just going to click this and say done. Absolute returns. Let me just click this. So again, it's sorted in a high to low fashion. Here, top one is Axis Liquid Fund, followed by Aditya Birla Sun Life Liquid Fund, and then Nippon India Liquid Fund. I think the fund names are same, just the ranking has changed. Okay. Now, one more important point comes up is, Rachana, okay, returns are fine, but I want to ensure that returns are not taken with a higher risk. And for that, we typically check Sharpe ratio. Okay, now, just to give you a comparison of what is return versus risk, these days, England versus India matches are going on. So, I'll give you an example. Let's say a batsman has hit 100 runs with all the aerial shots, something like Rishabh Pant, okay, versus there is a batsman, let's say Shubman Gill, and he is playing all ground strokes, and he has also scored 100. Now you'll be like, returns both have given 100, but who has taken more risk? Shubman Gill has taken less risk, Pant has taken more risk. So I am interested to go ahead with a fund which is giving me better returns with a specific unit of risk, or with a similar unit of risk. Okay, and for that we go ahead with Sharpe ratio. Okay, and you can also see the ratio for, I mean, formula for Sharpe ratio. If you want, you can check it out, but it's anyways readily available on ticker tape. So let's get back to the screen, and here let's add one more filter. If you're not sure where it would come, ideally it will come in ratios, and it is, but you can also directly search here. Okay, so I'm going to ratios, Sharpe ratio, and I'm going to say done. Okay, important, higher the better or lower the better? Higher the better. So I'm going to just sort this. Which are the top three? Again, Axis Liquid Fund, Aditya Birla Sun Life Liquid Fund, and Kotak Liquid Fund this time. Okay. Chalo. So top three clear? Yes. Now you're saying, okay, all returns related things clear, but what about expense ratio? Because of course, expense ratio, lower the better. So here again, I click here, but I want to sort it in an ascending fashion from lower to high. Again, Axis Liquid Fund at number 1, then HDFC Liquid Fund at number 2, and Nippon India Liquid Fund at number 3. Okay. Ultimately, I would also want to check the exit ratio for here. If I'm not sure where would it come up, I'm just going to type out exit load. I said exit ratio, I think. Exit load. Lower the better. It's exactly the same for all. So no differentiating factor per se, but that's how you choose which liquid fund could be a suitable choice for you. I told about 5 different parameters. I'm going to quickly wrap it up for you. First thing we said, AUM, higher the better. Second thing we said, returns. In returns we did 1-year return, 3-year returns. Of course, the parameter is higher the better. Then we checked about Sharpe ratio. Sharpe ratio, what does that tell us? How much returns are we generating for a specific unit of risk, correct? Here again, the thumb rule is higher the better. Fourth, we checked what is the expense ratio. Lower the better. Exit load, lower the better. And based on that, I told you which are the top 3. You can make a choice which suits the best for you. Now let's move on with the bonus tip. Now that we checked that in a lot of cases, Axis Liquid Fund was coming in top 3. So I'm just going to give an example for that. So I'm just going to click here on Axis Liquid Fund. I'm going to go to view details. Now if I just scroll down, you can see key metrics here as well. We did talk about expense ratio, but what are they comparing it with? Category expense ratio. It is lower than the category expense ratio. Obviously good sign. Yield to maturity, again like a return ratio. Here you can see category yield to maturity is 5.97. For this, it's 6.3. Again, higher the better, better than its category as well. Sharpe ratio, for category it's 6.24, and for the fund it is 6.5. So again, higher the better. So a good sign. Is this the bonus tip? No. Okay, then what's the bonus tip? If you want to check, you can also check their holdings. What is their portfolio allocation? Now you can see here, portfolio allocation goes something like this, almost more than 50% in commercial paper, almost 37% in certificate of deposits. You have in treasury bills, corporate debts, whatever. But where, which company's commercial paper or certificate of deposit or treasury bills? Here you can see, I'm just going to click on see all. You can see these debt instruments of which companies, be it Canara Bank, Indian Oil Corporation Limited, HDFC Bank, Reliance, Jio Infocom, you can see the list, right? Very important, you have to check what is the credit rating. You can see here CRISIL A1. ICRA A1, CARE A1. Now, whenever you get a rating of A1, what does this mean? Typically, A1 rating is given for short-term instruments, and it signifies it. I mean, it signifies short-term safety as well as very low credit risk. So, all in all, will be considered as good. So, always remember you can also go and check the holding and see the credit ratings as well. I hope you found a lot of value in today's video. If you feel that I should do a similar video of mutual funds with a different fund category, please let me know the name of the fund category in the comment section below, and I would love to make another video on such mutual funds. So I hope you found a lot of value in today's video. I'll see you in the next one. Till then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.